Yesterday, Insurer Discovery reported a 74% jump in full-year profits, saying it benefited from falling COVID-19 mortality claims and a return to more normal business. Discovery said it would withhold the ordinary share dividend in light of the uncertain future impact of COVID-19 and the volatile global macroeconomic environment. Nastassia Arendse spoke to Discovery Bank CEO Hylton Kallner about the year that was for the group, as well as the future plans for Discovery Bank.
The period under review was a complex one. If you recall, the first half was obviously in the sort of the depths of the COVID-19 pandemic, and that had a significant impact, in particular in Discovery Life. And then the second half, I think, is notable as a result of the broad macroeconomic uncertainty and volatility that we've experienced. So against that background, the performance and really a strong recovery coming out of the COVID period with strong new business across all of our markets has been a really pleasing result.
Let's talk about Discovery Bank. I mean, what kind of growth are you seeing on that front at the moment?
So it's been a really strong and important period for Discovery Bank. We crossed a milestone of 1 million accounts during the year under review. We now over 500,000 clients, 11 billion rand in deposits, and growing by 800 to 1,000 clients per day. So accelerating really strongly and ahead of sort of our plan, and growing well. And I think all of the signs are really positive in terms of the quality of the client base, the fact that we're attracting clients from across the spectrum of South Africans, and really, I think the feedback that we're getting is really positive from them.
Let's hone in a little bit on that client base. I mean, starting off, how have you seen the evolution of the client base change, and how far is that, or close to it, to your targets, as it were?
So we strongly ahead of target in terms of just client growth and acquisition. And what's interesting is that our clients are tending to come from sort of this a really broad range of the broader public. So we're attracting existing customers from within the Discovery ecosystem. About 45% of our clients have joined us and have an existing Discovery product, but about 55% are new to Discovery. So we're sort of attracting clients from within and outside of the existing Discovery base, and that crosses across all socioeconomic and age categories as well. So the fact that we're a digital bank is obviously something that appeals to customers, and they tend to be agnostic in terms of age or market segment. And I think it reflects the fact that South Africa is really emerging as a digital banking kind of center, and people appreciate the convenience, the efficiency, and the benefits of a very simple banking experience.
You had a break-even scenario of around in 2024. Is that still the case, or has things changed a bit?
Yeah, so I think we remain on track and on plan in terms of our break-even sort of plans and targets, and from our viewpoint, that remains intact. And in fact, the exciting part is the foundation that we built. Over 75% of our clients are highly active or primary clients, and so when you think about it in that context, we're growing strongly on a quality base with quality revenues, nearly 1.5 billion rand annualized revenues flowing through the bank now, and that's really sort of fueling that growth towards the break even and beyond.
What's your sense of China right now, given the fact that you're going through a situation where you're having these lockdowns in certain parts of the country?
So I think the COVID impact in China is obviously still significant, but our Ping An Health business has been really resilient through the period. It was affected by investment markets, but the core operating result was still incredibly strong, and there's nearly 30 million clients now covered within Ping An Health, and I think reflecting just how large that market is and how large the potential is in that space.
Let's talk about the rationale behind the decision not to declare dividends at this stage.
So I think the environment remains uncertain from our perspective. We remain strong investors, in particular in our new growth areas of the business. The bank being the largest in that space. All of the entities within the group are incredibly strongly capitalized, and there were strong cash flows over the period. But we remain cautious just in terms of our outlook, and we're investing strongly for the future.
In that environment that you've just described, I mean, we're dealing with high inflation, higher interest rates. What's your sense of your client base from an affordability perspective? Are you expecting to see a little bit more pressure when it comes to, continuing with premium payments, etc.?
So I think the environment is tough, and we can see that. And I think consumers obviously are displaying that sort of sentiment around affordability, and we're conscious of that. We delayed medical scheme increases in Discovery Health medical scheme by several months, and we did that last year and this year, and I think that served our client base really well. We're seeing remarkably low lapse rates and very strong persistency across all of our products. I think it reflects the fact that people in a pandemic obviously hang on to and hold on to their life insurance, their severe illness, and their medical scheme. Those are core needs in a pandemic environment, and they talk to sort of the relevance of the product. But we are acutely conscious of the fact that consumers are under pressure. Inflation is obviously having a negative impact. But we're seeing the central relevance of the product in that we continue to see strong new business, strong demand for the product, and very, very good growth within our existing base.